It's your job to perform the cash walkthrough this year, and you're wondering, what should I ask? So as we look at a cash walkthrough, let me start by saying that the purpose of the walkthrough is to see whether or not the client has internal controls that are properly designed, and to see whether or not those controls have been implemented, they have been in use throughout the period that you are auditing. So you go out and you begin to do your cash walkthrough, and as you do so, you will begin to ask questions of, say, the CFO or the finance director or somebody in charge of cash. And the questions that you'll ask, and you'll see a few that I suggest here in just a moment, there's no magic list of what to ask, so don't feel constrained by these particular questions. You're simply trying to see, as you see here on the screen, the purpose is to see what could go wrong in relation to cash. So as you do the walkthrough, ask yourself, what could go wrong based on what I'm seeing, what could go wrong in relation to the cash accounts. So here's a few questions that you could potentially ask, and one of those would be whether or not a timely bank reconciliation has been performed throughout the year. You want to know that those bank recs have been performed, that they've been performed on time, and that they've been performed by a person that knows how to perform bank reconciliations. One of the other things you want to ask about is whether or not all bank accounts have been reconciled. So you want to know not only the operating bank account and say the payroll bank account, but say a client has 10 different bank accounts, you want to know that all of those bank accounts have been reconciled appropriately and timely throughout the year. One other thing you could ask about is whether or not a second person reviews those bank reconciliations. So, you know, performing the bank reconciliation to me is the most important internal control in cash, and probably the second most important is that somebody else reviews that bank reconciliation after it's been created by that first person. This just keeps that initial person honest, and it also ensures that the bank reconciliation is being performed in the right manner. Another question you want to ask is whether or not all bank accounts are on the general ledger. You can have situations where a particular bank account has not even been set up on the general ledger, so you want to make sure that all bank accounts are on the general ledger. Another question here is whether or not all activity has been cut off appropriately at the end of the period. You don't want any subsequent activity being included in the current year. So if you have a calendar year that you're auditing, you don't desire for January 1, January 2nd transactions to be appearing in the current year that you are auditing. So I ask about how do they get the cutoff right at the end of the year? How do they ensure that none of the subsequent activity is included in the current period? Another thing that's really important in reference to cash is the segregation of duties. Now, we use this term a lot, sometimes I think too loosely, but as we talk about segregation of duties, we want to see that in a perfect world that there's somebody that enters the transactions into the general ledger, that'd be the first person, then that the second person, somebody else, is receiving cash and getting those deposits into the bank account, that there's another person responsible for dispersing funds, and that there's another person reconciling the bank statements. So you want the persons entering the transactions in the general ledger to be different than the person that handles cash or that makes payments, and also that there's a third person that reconciles these accounts. At a minimum, you desire to see that type of structure. If those are there, then generally that'll give you pretty good assurance that nobody's stealing money. If you don't see that in play, in other words, there's one person sometimes that's doing all of these. That one person enters the transactions, they make the payments, they receive cash, and then they reconcile the bank statement. That is like dynamite. It is real dangerous. So if we see that situation, then the design of the control is not appropriate. And what you're going to do is when you do your risk assessment for cash, you're going to increase your risk of material misstatement, which means you're going to do more work on the substantive side as you perform those back of file procedures to prove cash. Another question that you might ask is what bank accounts were open and closed during the period? Are there any restrictions on the bank accounts? And then who's authorized on the bank signature cards to sign checks? As you look to see who's authorized to sign checks, then think about that person in relation to the people that are entering transactions. They shouldn't be the same. Another thing is who has the authority to open and close bank accounts. What's the nature of each bank account? So you might have a payroll bank account. You might have an accounts payable bank account. You might have some special endowment checking account. Other things you want to look at is, are there any cash equivalents? So say they're buying CDs with a 2-month term, then that would be a cash equivalent. Or if they had a money market account, that would be a cash equivalent. And then were any checks held at the end of the period? So sometimes clients will write the checks on the last day of the year and maybe not mail those out until 3 weeks later because there's really no cash in the bank account. Well, then you need to reverse that transaction and put that cash back in the account. So these are just some examples of things that you're going to ask as you perform the walkthrough for cash. Now, in the audit standards, you already know that you are required to inquire, inspect, and observe. So those are the 3 actions you are performing. You cannot rely on inquiry alone. So you're going to ask questions, but you need to marry those questions with either observations or inspections, and I'd recommend that you do all 3 as you perform your walkthrough. For example, under observation, you're observing in relation to segregation of duties who is doing what. That's an observation. Then you're inspecting documents such as the bank reconciliations. So you want to inspect various documents as you perform this walkthrough. When you get to the end, we're going back to where we started. We're thinking about, do controls exist and have they been designed appropriately? If they have, that's going to help us in terms of risk assessment and planning our audit later on. If there's no controls, then what that means is you're going to have to do a lot more work in the substantive part of your audit. If controls are present and records are in good condition, then generally you can bring down the amount of work that you're doing as the auditor. So In performing walkthrough, I'll, in summary, say to you, we're thinking about the design of the controls and whether or not the controls have been implemented throughout the period, and then we're inquiring, inspecting, and observing. And as we do this, we at the end of this walkthrough, I generally create a memo and I summarize the documents I've looked at, the observations I've made in relation to who is doing what, the inquiries that I've made. I document who I interviewed. I document the particular documents that I looked at. So if I looked at the March bank reconciliation, I'm going to say, I looked at the March operating bank reconciliation. So you want to document what documents you looked at, but more importantly, what controls you reviewed and observed. So that's how you perform a cash walkthrough, and I hope this is helpful to you as you do these in the future.